It is very important for every transportation trucking company to use a high quality MC authority lease agreement. Otherwise, the government can reject the authority of your business and you can lose a lot of money. The purpose of an MC lease is to protect your carrier in a legal manner. This way, a carrier leasee can maintain possession and control of all trucking equipment until the date that the agreement ends while adhering to contractual terms. Let's go over some common MC authority lease agreement sections that you might want to place into your own agreement or contract. Having these sections in your document can protect your business from potential legal issues down the road. The first section of your lease agreement can define who the parties are. For example, the first party might be an authorized carrier. The second party will be the owner of the trucking and transportation equipment. The key is to make sure that both parties sign the document once it is complete. A second section in your MC Authority lease can state the duration of the agreement. Most leases provide specific information and time a lease begins and ends. In this section, you might want to create a brief summary of your circumstances surrounding the lease. For example, why is the leasee renting the equipment and when does the party intend on giving the equipment back to the other party? Next, Section 3 of your agreement can address ownership responsibilities. This means that one party will have temporary legal ownership of specific equipment listed in the agreement. Be clear that the carrier leasee will maintain control, use, and take full responsibility of ownership throughout the complete duration of the lease. It is now time to move on to Section 4 of the MC Authority Lease Agreement, which addresses the issues of compensation. Make sure that you include the exact financial terms of your agreement in the lease. This section should specify that a specific amount of money will get paid by a party to the authorized MC carrier. Payment can relate to driver services in addition to equipment. Parties can refer to the compensation as a gross revenue or a variable rate. Otherwise, a flat rate mile percentage is another option for stating payment terms. It is up to the owner to define other criteria for payment in the agreement. Common payment criteria can include mileage, MC permits, other permits, fuel, and fuel taxes. Next, Section 5 of your agreement can address the leasee returning the equipment and receiving a receipt. For example, the agreement can state that once the leasee reaches termination, equipment must get returned in excellent condition. Then, a receipt will be provided by the carrier. You can also use this section to define how property will get loaded and unloaded. Section 6 of your MC Authority Lease Agreement can focus on the process of supplying the freight bill and all related freight documents. These actions have to take place during or before the time of settlement. This is when a copy of the freight bill will get provided. The freight bill should not be handwritten. Instead, it must be a computer-generated document. A freight bill should be provided no matter what the method of compensation is. Next, you can move on to the final section of your lease agreement, which focuses on insurance. The carrier must agree to maintain specific insurance coverage. The concept of defining the insurance coverage terms for the party is an official FMCSA policy. Do you need more information about how to draft an MC Authority lease agreement? If so, please click the link below. It will direct you to our third-party services of fmcsaregistration.com. Our organization specializes in providing full-scale MC Authority lease agreement solutions to customers all across the United States. If you have any questions about forming an agreement, do not hesitate to give our FMCSA compliance experts a phone call at 866-477-0707. We're standing by to help you and your company prepare a world-class lease agreement. Our team looks forward to helping you and your business succeed.